this is probably I started this whole Chicago landlord secrets series, whatever, and I think I've done. My goal is to do it every single week, and I think I've done it on average every other week. But when I was first starting to think about doing this, having you on here and hanging out with you, that was one of my motivations for getting this up and running. So I'm excited. It's been a while since I started, and you're on here, so I'm grateful that you're here today. So, but
No.
anyone that's
Yeah,
anyone that's listening to this from the beginning, my name is Mark Ainley, GC Realty Development. We're a property management company. I'm an investor, co-host of Straight Up Chicago Investor, Chicago's #1 real estate investing podcast. Our goal is to always give back to community. Obviously, we have a property management company. We want to grow that. We want to grow our network. So there's those levels of why we do things. But I got Jared Cott here today, and Jared, for everyone that doesn't know you, which isn't many people, give us a quick introduction of yourself.
cool. So I'm Jared Cott. I'm the owner founder of Marblestone Property Group, here located in a physical location on the south side of Chicago. We focus primarily on C and C minus asset classes here in the residential space, 1 through 4. We also do a lot of multifamily stuff. We've been live with this since 2013, but took the first 5 years to sort of learn the ropes with my own assets. So Marblestone was first created just to manage some of the assets that I had. And then we expanded and got serious about 7-8 years ago, third party over on the southeast side.
It's funny. That's how most management companies start, right? No one ever wakes up and says they want to be a property manager. No, when I grow up.
Yeah, and I know that we've talked about this, and the industry's definitely changed in the last decade or so. But yeah, I had that was not my aspiration to be part of and run it. It was like I wanted to wear an investor cap, and as things began to grow, I remember Googling and picking up phones, and nobody would get back to us. And that really, really bothered me 10 years ago, because I was like, these are the most important assets that I have, and I need them to be managed well. And if somebody can't get back to me, I don't know how comfortable I feel handing them over. So I love your tagline of GC being the responsive property management company that's done. But that's ultimately how it happened. And we started figuring out with our own stuff. And then, through conversations like this, and then back in the day, I was doing more, physical on location meetups, and for years, people were saying, "Hey, can you manage my stuff? Would you take a look over here? I'm right around the corner." And I'm in full transparency. I didn't have enough knowledge. Like, I was okay making mistakes with my own stuff, but I could handle that stress. But to take somebody else's assets and make mistakes on them, I wasn't ready. And then there was just this one first customer, and still a friend of mine today. And he said, "Come on, please, we'll work through it." And it's kind of taking that leap. And I'm like, it's the same stuff. We're just writing checks to different owners, right?
Yeah, we'll get into some of those risks, because I can resonate with how you felt about your own versus somebody else's, especially in a place on the south side where management or attention to detail, you miss something, things can go wrong fast. But yeah, we'll dive back into that. But it's funny, your desire to find a property management company was really how we started investing, or how we started managing our own stuff on the south side, where we have this management company that's out in the burbs. We started buying stuff in 2008 on the south side, started in Washington Park, and we're like, we'll just find another version of us down there. And lo and behold, we couldn't find it, and we I kept running into shady situations. And don't get me wrong, the economy was tough back then. Everyone was kind of trying to figure out, but we couldn't find anyone. So it's like one by one, we're like, we'll just manage this one, and we'll just manage this one. And then we had a property manager that was just kind of floating around, just helping us on the side. We didn't have enough to pay her full time, but she was kind of our glorified property manager, and we were giving her X amount of dollars per unit per month. And but yeah, ultimately it was because I couldn't find people like Marblestone, yourself, or Jason from Landmark, like all these people, Tim now is down there as well too. None of you guys were there yet. So there was no one to call on except a bunch of people that saw a white guy from the suburbs that we're going to take advantage of. And I got taken advantage a lot on the south side. So, but yeah, so similar kind of reasoning why we got into it, and we grew the management to a few hundred doors before we really stopped on our own stuff, and then started taking on a few hundred more other clients. But yeah, it's funny how we both kind of ended up managing on the south side for the same reason.
Yeah. When did you guys exit the south side, and what were the main reasons on why you chose to do that?
So we went from '08 to 18. So we spent 10 years on the south side doing the whole burst strategy. We did 482 properties. And the reasoning was not because the south side. It wasn't until later on that I realized how rough we really, how hard we really worked for 10 years.
Yeah.
But it was more of, what we're trying to do is tougher to get the amount of properties that we're trying to buy at the price we're trying to buy. So we knew, we only invested in a handful of different neighborhoods or invested in a handful of different footprints, right? Mm-hmm. And we knew our footprints down to the square inch of how much it was going to cost to, just put trim in a new Georgian or a 2-flat with 3-1. Like we know how much square footage, we had our turnover numbers down. We knew exactly. But then someone would come in and bid $10,000 more, which back then, it was like 40 versus 30. Right. And it's like that threw off all our numbers. And that got steeper. And then a lot of the labor, when the market crashed in '08, you had union workers out of work. You had guys that were struggling, guys that would go anywhere. They come from the north side. Then as the north side started opening back up, or union jobs started to pick back up, everyone that they did that to feed their family. They drove down the south side. They grinded down there. And they started to get harder to come by. So, and then again, with more investors in the market, it was more competitive. Someone's going to pay Joe the builder $5,000 more than we were going to pay because we know our numbers, and we know Joe's probably not worth it. Right. But ultimately, we said we had this management company that we've been around since '03, and that company, we looked at return on investment, right? So if we're going to buy X amount of properties in the next year, how much return can we get? We looked at that with the management company because throughout the years while we were investing, the management company was still growing, and what we could do that and the opportunity we had in the management space was huge. So that's really what we elected to jump out and get back into the management full time, really, and really put a focus on the management.
Sure.
But the other thing, and I'm grateful for that. It's funny how. 44 years old right now, and you start looking back at the last 2 decades, and you start, you talk to people about what should I do, or it's really hard to get uber successful. I'm not saying I'm uber successful. I'm not even sure what that would measure as, but it's not to go without being focused or going deep on something. A lot of people want to be in real estate investing or want to be a real estate investor, but they have a niche and they go really deep on something. It's really hard to just find random flips and scatter throughout the suburbs and consistently do it unless you have some sort of machine. Tom does flips and that's his career, but that's his day job. Like that, he has a footprint. He has a machine going for all sorts of it. It's really hard to do that sporadically. And it brings you back to management where it's like, all right, I could be in real estate investing every single day, have reoccurring income, provide a service that I think is needed for other real estate investors because I really believe in. Here, I'll tell you this. I'm not sure where you stand with this. And we'll talk more about this as we're talking about our services later. But man, you could manage your own property cheaper than your company could do it, but you're not accounting for your time. And that's what we sell is, hey, we're going to lower your risk and we're going to buy back your time. And those two things right there, you do it all day long. You go over there and fix the coin operating machine. But man, it just took you half a Saturday and you missed your son's baseball game. So what's that worth to you? Is that not worth $110 and a $200 work order? Right.
And I mean, then you move into like there's an emotional piece to it. Like that's a great example on like the technical side. Like let's just say, it can go and fix the toilet yourself. That's fine. And all the things that you said are accurate. There's also an emotional piece when you have to do things like follow local laws and send a 5-day notice. And if you're self-managing that stuff and you really, there's involvement in there that unless you're in the trenches, I don't want to say I'm fully conditioned to it, although that's certainly not my role today. But I remember having difficult conversations with tenants, that have fallen on difficult times. And some of them came back with empathy and compassion, say, hey, we got to work this out. And some of them did. But then, spending Saturdays on with people screaming at me and things like that. I mean, that was not the way that I chose to do it. So, I get everything that you're saying. I really do. If I can go off on a quick sidebar, I'll tell you an interesting story of, we're on the southeast side of Chicago. I spend about 60% of my time here, and then about 40% of my time in Southwest Michigan, doing some Airbnbs and stuff, about a 90-minute ride. But I'm big on culture with my team here, and I'm also big on community. So anytime I can offer, much like you, some value, I'll stop and spend some time doing that. So we're going to go back about 7 years. Marblestone's only managing my own private portfolio. And it was, let's call it a Tuesday afternoon, much like now. It's coming on the middle of July. The days were hot. And there were some guys in their 20s sitting on the front porch. And I said to them, guys, what are you doing? It's beautiful out here. I'm glad you're enjoying the day, but like there's things out there you could be doing. And he said, well, what would you recommend, Big J? What do you think? Are you hiring? And I'm like, I'm not hiring right now, but I'm like, think about it. You can open up, you can wash cars, you can do things like this. Okay, fast forward, the city of Chicago is on sending water notices, right? 2 months come by, we just open up a physical office. My wife, who's also my business partner, that's like super detailed, starts going through the mail. And she's like, 83rd and Brandon, the water bill was like $2,800. And I'm like, what? So before we send the plumber, I ran over there and spent my Thursday trying to check it out. And before I got there, there was literally a line of cars. There was water, bubbles, the whole nine. And you know what those guys did? They took my entrepreneurial advice, started a freaking car wash using our water. So unbelievable conversations and events can happen on the south side of Chicago, but we got to be careful on, how we deliver message to people. That's for sure.
I didn't give the entrepreneur advice, but I did walk into a similar situation, and it was in East Woodlawn at 65th in Maryland, and it was a bikini car wash that was going on for, and it was the only reason I found out was because I forgot the past alderman's name. His office right around the street, and his staff kept going to get their car washed for like 3 days, like every single day for 3 days, because you had all these girls in the alley right there, is backing up to Cottage Grove, and but ultimately they had the water. Our water ended up being crazy high, and that was the start of us starting to not leave spigots open, or we used to put a little lock on there on the multi-unit buildings. So there's no flowers at these properties. No one's watering the grass, so we're only inviting ourselves a problem.
Cap it and move on.
But yeah, we dive into, we're talking about kind of buying back your time for local people that actually have the capability of it. What I want to talk to you about today is out-of-state investors, people that really depend on the boots on the ground for companies like ours. But, before I go there, I'd be curious on, because everyone's got different opinions on this. You look at A, B, C, D class, and you said you do C and C minus. Like, what makes a D class, I guess?
Well, that's a great question. So I would classify D, and I have a fairly high risk tolerance where, like, it's not that I wouldn't want to go there at night, but like visually, there's a feeling there, right? So you can make anything look good on the internet, right? So a D for me is heavy gang presence and a lot of crime, burnouts, like burned out buildings. Massive abandoned cars in yards. And then what I would call, and a lot of this comes with experience, is like the heavy, like foot traffic. I'm not talking about like a Cottage Grove where there's economic activity going. There's a different feel in what I would call a war zone. But the big driver on that is crime and aesthetics.
So we had an office on 47th Street, and we had two offices on 47th Street. We had an office over on 61st Street at one time. And when you're working in that office, the amount of activity and people just yelling across the street, like it's just something you don't like. It's hilarious. Like you just don't get that out here in the burbs. You're lucky if anyone even like kind of says hi down the street or walks by it, but they're yelling, "Hey, yo, Jim!"
Yeah.
I love it.
One of the buildings I own, and I love how you get anchored in on addresses, right? So like. My first office was on 84th and Muskegon, which is a residential area. but it was a mixed use building, and we had it. And we rented the top, and same thing. I mean, it was just there was a lot of chaos on 84th and Muskegon at that time, and I thought to myself, well, there's probably some better places to have an office. And now we're in a bank building, things have changed. But in the beginning, you got to bootstrap it to build it up and make it happen.
Yeah, 15 years ago, 47th was not what it was today. So the first office, we were right next to an SRO. I mean, there's definitely not there's a lot of underground economic activity going on. It wasn't above board. The alderman was not in favor of the economic activity going on. All right, well, thank you for that clarification. But the one thing that you get a lot, and I imagine I'd be curious about what percentage of your clients are out-of-state investors. I know for us it's about 60%. But when we started taking on clients beyond our portfolio in the South Side, it was investors living somewhere else chasing the cap rates on the South Side. Mm-hmm. Talk to me about kind of what your portfolio is made up of with that, and that kind of how you kind of came to take on that business. Your thoughts about it in the beginning.
Sure. Yeah. So we're right there. We're a touch higher. We're 2/3. So call it 66% ish on out-of-state investors. So our bullseye on the client avatar is age like 35 to 55, married, kids. Those investors want to spend time with their family. They want to focus on career. What they don't want to do is what we talked about earlier, which is changing the toilets and the locks and delivering the notices. And they're using real estate as a vehicle to increase their wealth long term. That's our avatar, and our breakout is about 2/3 of our portfolio is.
Nice. What's the key differences you kind of see in your local versus out of state?
So I'm just going to take this with a blended approach, but it's twofold. The locals, not all, but some. The difficult ones are clients that have self-managed before, and then they make that transition with a professional property management company like Marblestone, and sometimes they get a little, I would say, like a little shocked by sometimes the invoices, but they're not going back to value the time of it because they used to do it. And then typically it takes in our experience about a full quarter. So call it a 90-day cycle, right? Where there's a behavior transition that has to happen, right? It's like, well, they don't give this lady a 5-day notice because she always pays on the 17th and she's been with me forever. And it's like, we understand how to work this, and our goal here is certainly not to just deliver notices and kick everybody out. It's to get everybody kind of moving in the right direction, rowing in the boat, and certainly setting, proper expectations. But I think there's that magic moment around 90 days where the local investor can, like, what we would call, take it from the book, EOS, where they let go of the vine, right? Now, in order to do that, we have to deliver on our end, right? We have to communicate. We have to deliver clear statements. We have to, do the same, if not much better, in terms of delivering service to both the tenant and working the vendors. And it takes that time, really, for those owners to realize, wow, this is totally worth it. Like, I don't have to do all the things that I used to do. But in our experience, there's always a learning curve to it. Because as humans, we always think that we know it best. It's our asset. We know how to do it. I know how the door works. I know that. Just let it go. Focus on other things. It's cool to see when they make that transition, because then over time, what happens is, we're in the relationship business here on both sides. Right. So as we get to know our owners deeper on a deeper level, one of the questions we ask is say, well, how are you spending your time more? And we jokingly say, are you buying more buildings? Like, they're spending time with their kids, right? They're reading books. They're touring around Chicago. They're not dealing with the stuff that we deal with for them. And to me, that's a real good service and value that both of us are able to provide for, owner clients.
You're a deep spiritual person. I would categorize you as, and you know what you just referenced though, the letting go of the vine, that's a human quality that is across board. You know, it might be a wife not being able to care less about something around the house, or a
Sure.
for me, not making sure every detail of the next blog that goes out is perfect, or whatever it might be. That letting go. How do you give advice to any not even related to real estate, to people letting go, or maybe something you've done or accomplished to let something go?
It's a great question, and I like these sort of questions.
Because you're deep and spiritual.
I'll give you I'll give you an example of what I'm going through, and also I don't know if I mentioned this, but if I have, I'll just repeat it. So my wife and I are both business partners here, and we couldn't be two completely different personalities, right? I'm much more in like kind of a leadership role. Let's go. Let's make everybody feel good. Rah, rah, rah. Big execution, big vision. And she's all details, all process. So when you put those things together, it's awesome. Here's moving on to the question that you asked. How do you let go? I think it takes time on anything letting go, whether it's personal or professional. But trust is the first thing. I think you have to have some sort of trust, but then you also have to have proper expectations, right? There are things that I've let go in my responsibilities here at Marblestone that they just didn't serve. Like, I had no problem doing them, but they didn't serve me as well, right? So now I'm spending more of my time on culture building, right? I'm thinking about high level vision, and I spend a lot of time in one-on-one meetings with the team. But when I'm doing some traveling, or if I'm away from the office doing some of that, call it deep work, I trust my team wholeheartedly, but I still have this feeling inside, like, are we good? Is everything, all the boxes check and this and that? So I don't know if it fully goes away, but I do think, calculated, educated risk are part of this game, not only in business, but in life. It's like, let's take our shots. And then I as you know, because we're tight, I like to ask myself, what's the worst thing that will happen here? But then I don't stop there. What's the best thing that could happen if it goes perfectly? And you know what happens? It falls in the middle, right? Rarely is it the worst thing in the doomsday that we think, and rarely is it like way over here on this side. It's like in the middle. So I think it takes time to let things go. But also ask yourself, like, in your topic of like buying back time, like, who doesn't want more time? So it's like, if we let something go and it may feel difficult or uneasy for us, well, let's get clear on like, what would you replace it with? It's not just checking the box to go, I'm good. I think it gets easier to go, man, if I let that go and I insert this, we can go to the next level on whatever that may be, personal or professional, real estate or non-real estate, right? That's the way I see those things. But I also think it's about building reps. The first time you let go of something is much harder than, the 13th time.
Well, I think there's two things at play. I think humans put, including myself, the risk, the downside, at a way higher fear factor as the potential upside. You'd be more fearful of losing $10 versus winning 100.
Right.
Like, and at the same time, the not being able to see things that way makes you focus on the downside, and ultimately you make decisions based on it. Now, at the same time, you might be able to let go, but when something goes wrong once, you also now have that bias that you always point to. Because this happened one time, it will happen every time. So we're flawed as humans for both those things. One, we look at the downside. Two, we have these biases that haunt us. I have that haunts me in business. I have them haunting my marriage. Like, it's like, because you said this 17 years ago, I still am fearful every time you look at me that way, whatever it might be. But we have these crazy things that really get in our way. I think the only way you ever really get out front of that is be able to recognize that, which is kind of crazy, and it's a lot harder to do than I'm saying it. But to be able to step outside of yourself and be able to see those moments, like, oh, that's scared Mark of that moment 17 years ago. Like, he's cool. Like, just keep moving. Like,
right. No, it's well said. And a lot of this self-awareness stuff, like it's not a snap of a finger. You can make a decision in the snap of a finger, but it's the reps, right? It's how often are we taking a look under the hood, if you will, and things definitely get easier. I mean, if you never took a shot with GC, I mean, although it's exciting, it's very difficult as a business owner to get things off the ground, right? Same thing for Marblestone. Like I had I was fired, but I had a relatively, it certainly wasn't a backbreaking job prior to that in corporate, right? And then I was too prideful at that time once I got fired to go back into that industry. So, I mean, I would go as far as saying like it was excitement, but terrifying at the same time. So as I look back at certain examples in my life, and I'm sure you have ones that are very similar, like those things make it easier for us as humans to let things go too, right? The more experiences that we go through, we're like, well, if I can handle that, I can handle this. If we can do that, then we can do this. And then the level of thinking begins to rise. So.
Yep. Good. I like that. I like the deepness. Going back to out-of-state investors, though, I think the other, we kind of dove in a little bit on the local and their troubles of getting over things. Heck, I don't know if you have any of these, but we actually have clients that live in the building we manage. They're house hacking and they don't want to manage the other two. So that's a whole nother level of like strong individual that they could look past things. Whatever. Now, I used to be against that. I think that was a bad thing. But if anything, they're on-site management for us that just no one else knows that they're spying. So. But that's definitely something that we have a handful of those now. They get mad at us because we can't fix stuff in their unit, and a lot of times it's just because our system it's stupid obstacle, but we usually get it done for them. But the out-of-state people, the ones that maybe bought a property here, maybe they live in New York, maybe they live in California. Some of the obstacles that I saw early on, and not so much. Actually, still probably today is there's so much that we know, so much that me know from learning, from being around other people or being burned by these things that they just don't understand. Like just silly things like security deposit. Understanding that you have to bring an attorney to closing, otherwise you're going to get screwed. We are one of the few states. That's always what I kind of start with. It's like, all right, you got an attorney? Well, why do you need an attorney? I closed my house here in California. It's like, no, you need an attorney. It's totally different than California. Like that's very different than anywhere else. The fact that you should be contesting your property taxes, I think it's something you're allowed to do every county around the country, but people just take that for granted. Like I'm okay. They're not gonna screw me. It's like, no, in Cook County, like this is built by the attorneys. You need to make sure you don't get screwed. Like, so, but it's those things that I feel are always the biggest, rental license. What the hell's a rental license for the suburb people or I can't collect security deposit. How do you offset your risk? Like, oh, okay, well you closed 3 weeks ago. Like we got to talk about this. Right. So I made sure to come across those.
Yeah, there's a bunch of that stuff, Mark. Everything, and like we do a lot of subsidized housing. So sometimes the clients want to be educated on that, but many times they're like, listen, just however you want to choose to run it and fill it. Like there's some language that we pick up on where we're like, okay, this is the bullseye in the avatar, right? Now, there's some coaching involved to say, just like you mentioned, no, we can't do that here. We need to do it this way. I think the most important thing on the out-of-state is having those conversations and expectations up front that, like, we as the management companies that have been around for, call it a decade plus, and for guys like you, 2 decades plus, like, we get it. This is where we do it. So like, if you're going to hire us, trust us to allow us to do the job. Now, if you want to get coached and educated on it, check out your website. It's got everything you need to know. But some people, it goes back to letting go of the vine. Like some people just aren't the fit. Well, the bullseye that we look at, and I'm curious if you see it the same way, is like, these are the best relationships that we create and cultivate throughout the years is, I'm out of state. I know exactly why I'm buying it. I have no desire to know how to run it, which is why we're in contact and having meetings with you guys, right? Though that language is like, this is great. Allow us to do our thing. And in return, you get the benefits of the asset and then the local expertise here. But I think, for us, there's a range in between where Sometimes we need to coach. Sometimes we need to lead. Many times we say, listen, you know what? This may just not be a good fit, not between Marblestone or a GC and the client themselves. Just maybe you should start in your backyard. Maybe you should start there to get a feel for it, right? Because things are always different. Even if you go, we talk about counties, but you can go even from within Cook County, there's different things. And then you go into the neighborhoods and there's different lights. So there's like micro pockets of all sorts of different things that are constantly different, but then they're also constantly changing. So, that's where the value I see of like real local boots on the ground management come in to provide that just excess value.
It's funny.
It changes, as you know, very fast around here.
It's funny how different CHA is even different from DHA, DuPage County Housing Authority out here in the suburbs. Like CHA is like its own beast. I don't want to go too deep into CHA because we've talked about it here before, and we could talk a whole another hour on it. But just how different that process is. Now, the good thing is, I don't know if you've seen this recently, they're doing the rental approval prior to getting the inspection done. So that's huge in itself. Like Cook County started doing that, and I loved it. And now CHA is doing that, which is, man, that's beautiful.
It's a big deal. You can have me on for round 2, and we can break all that big government institution down and have some fun with it.
Yeah, for sure. These out-of-state investors, I think we're obviously attracted to the price range. And it's funny how it's like someone looks at like properties on the south side. They're like, oh, $100,000. Like, I'll take 4. It's like they're ordering French fries. Because the price is so drastically different. Like, I can't buy a single family home for less than $250,000 out here. Like, and you got for $100,000. It's like, and you do that because, but then they're like, oh, the taxes are crazy high. It's like, well, no, you're paying a price relative to that, and that's how prices, if anything, the city remains. It's a shame that the city remains affordable on the purchase side only because they get you on the tax side, which is the truth. Right. But yeah, the out of state and the shame of what you were saying there is some of that education, that rapport building that you could get with people that are buying in there. Is there are some bad characters out there. Obviously, we have there's plenty of awesome property managers. I think you're awesome. We have, for anyone listening, we have a best practices property management group. If you manage for more than 100 units for somebody else, you could potentially be in the group. You can check that out, straightupchicagoinvestor.com under resources. You could sign up for the group. But we have 25 awesome property managers that are in the Chicago and Milwaukee area in that group. But the bad character is then, I'm sure you've taken over a lot of properties where it's like they didn't sit down and explain them the rules. They didn't advise them not to collect security deposit. They didn't tell them that, hey, don't encourage them to call 311 if something's wrong. Like all those things. You should fix your porch because you're at risk. You shouldn't rent out that garden apartment till you do this, and this. So we come in on the back end and have to clean a lot of that up. And there are one, two things happen. Either they're super suspective of you, like, is this guy going to screw me too? Or they're super grateful and can't believe they didn't find you first. So I don't know what your experience is with that.
It's exactly the same, right? The cast of characters and then the transition over. It's I don't like, you can use any kind of terminology, but like there's some trauma there. Like, let's just call it trauma. Like you were, for whatever reason, you signed up with someone, and then that someone at some point made you feel comfortable, and then the ball gets dropped. And then I'm sure that people really began and tried to work through the issues that were at hand. A lot of times what we hear, which drives us crazy, and it's very difficult. Regardless of if you're in a C class, C minus, A and B, regardless of where you're managing, this business as a whole is super high touch. High touch with tenants, high touch with vendors, high touch with the city, high touch with the laws, high touch with the team. So the fact that what we hear, the number one reason people are leaving other different property management companies is because they can't get a hold of someone, right? So think about that. When you can't get a hold of someone and you know that things are not where they need to be, like let's say there's major vacancy issues, right? What is, we talked about earlier about self-awareness and kind of overall piece and stuff, but man, it's difficult with the unknown for me still. So if somebody goes silent on me, but it's something that's really important that I need answers on, we need to have empathy as professionals to say, put yourself in an investor's shoes. If we're managing this building, right? There's things that are going to go boom in the night. There's inspectors that are going to come by. There's going to be masonry issues. Sometimes you have to have porches. That kind of stuff comes with the business. But it's like the delivery of that message, and then also the delivery with, and here's the action plan, right? Here's the action plan to take us through. So, yeah, I think communication's a huge piece in this, and I think it's getting harder as more. And I love great competition because I think it raises the bar for everyone. But I do think that it's the bad cast of characters. Most of them aren't around. Like, we can pick a handful of them that were filling courtrooms in the city of Chicago for various reasons in the past decade or so. Like, they're not around as much anymore. I think that the market sort of weeds those things out, and I think it's a good thing. I don't wish harm on any competitors. Actually, I want to see everybody prosper and win. I think for all of us to prosper and win, we need to do things exactly like how you set them up, with the monthly group calls and the sharing of knowledge, and just look around. There's plenty of business for every one of us on this, in this city and counties. That's for sure.
1 million rental units in the Chicago market. 1 million.
What was it? 1 million rental units in the Chicago market?
You and me have 2,000 combined. So you think about like the percentage of the percentage of the percentage that we actually have in this market is kind of crazy. So, but yeah, I'm happy. I want to touch on the out-of-state investors. The other out-of-state investor that we have more so now than ever is the. What's great about Chicago? Chicago is such a call it starter city. A lot of the people go to college at one of the main universities, whether it be Wisconsin, Illinois, Indiana, Illinois, Michigan, whatever. 3 or 4 buddies, 3 or 4 girls, they get together, they come rent a place here. A couple of them get jobs here, a couple of them find jobs. They rent here, then they get a girlfriend, they move out with the girlfriend, they maybe have a kid, and then they move to the suburbs, they move out of state again. And they bought a place. They learn about real estate investing, whether it be Bigger Pockets, our podcasts, meetups. They're just financially savvy. And they bought a place, and now they're leaving town, or maybe they plan on leaving town, and now they're leaving, and they need someone to manage for. So that's the other. I feel that's the newer, because I think out-of-state investors are buying less in general, and they're buying less here. I think a lot of the attractive inventory has gone down some, but there's still getting around. I just got phone with someone that just bought a property that we're taking on management, but I think the transient type person that's leaving town is the next. And for us right now, it ends up being the person that's got the 2.5%, 3% interest rate. It's like, even if they didn't want to be a landlord, it's like, man, I just can't sell that. Like, it's huge.
Yeah. We don't see many people, regardless of where it is. And so this is kind of like more nationally, or, with friends and family and stuff. I don't know many people who put a mortgage on their home in, around the 2020, 2021, 2022 era. That's like, yeah, let me go and let me get out of this 2.5% loan and jump into a 7. I mean, if you think about that, if we just did round math and say that it was at 3% and the rates went to 6% and use, $500,000, the affordability is literally just cut in half on interest rates. So, right. We've seen a little bit of that as well here. A little bit of sort of different setup where it was like some people got in, then they house hacked it or bought it, maybe didn't like it, but the note and everything is so low that it's like, well, yeah, let's just keep this forever. So
I'll before we wrap up here, we got about 10 minutes left here, but I started. I put together a blog, an article based on, I realized, we started our own management system. We use AppFolio, but we use we use Podio for everything else. But we have so much data. So I thought it'd be
Mhm.
interesting, like, hey, what zip codes do we have the most out of our portfolio? How many workers have we done, and how many zip codes? What's the highest zip code? So I figure we're probably going to post this next week online, but I figure I'll share it with you just to get some of your thoughts on this, and I'll pull it up here. But we named the article. We track thousands of rental repairs across Chicago. These zip codes top for landlords. Um, we did so. What we did is we tracked them all. We just took it from the city of Chicago. We did uh, in the last 3 years in our company, we did 32,000 work orders, and
How
that
long was
is
that?
the last 3 years. Now that's across the entire portfolio. Hey, happy birthday,
Yeah.
Brian! You're on Facebook Live right now.
Oh, hey, what's up?
Oh, bring him in, Brian.
What's
We're
up,
only
Mr.
doing
Trevor?
this because it's your birthday. Happy birthday.
Thank you, sir.
Tell everyone on LinkedIn, Facebook, and YouTube that you're happy to be your age.
Yeah, I'm old. OLD. So I could be Mark's daddy.
You look great.
Good to see you, though.
Good seeing you, Brian.
But I took I took all the data and we broke it down by zip code just in Chicago specifically. So it ended up being like half of them were Chicago or 2/3 of them were Chicago or something like that. But 60617 and 37 were our two highest zip codes that we had. So I broke down kind of the units and so we had in 60617 we had 2,924 work orders in the last 3 years across 127 units in just that one zip code.
On a sidebar, I don't know if you know my zip code, but you know where I live locally. That's the zip code of our office, and that's the zip code of my Chicago address.
Nice.
And if we ran the report, although the numbers would be different, we would see some similar items here. It's very high touch.
Yeah, we had now the north side one that we had was 852 work orders in Logan, but we have 55 properties there, so the average is a little lower on that. But I thought that was interesting. I know you're at 60637, which is basically Woodlawn, part of South Shore, is high up there as well too. But just about pretty much similar ratio, just down a few percent.
Yep, that makes sense. This is great data, Mark.
Yeah, so I'm going to start putting this stuff out. For us over a 3-year period, we're getting like in a place like Englewood about a work order a month per unit. Is kind of what we average out to be. So some of it just comes down to heavier turnovers, CHA, and then we have 1 million appliance work orders on the south side, which is why we as a seeker we tried to get rid of having those. Have the tenants provide them, which creates a whole other set of problems. But that did save us some money for a while, especially on our own portfolio.
We tried that, but then think about it. It's like if the market. So you have a couple single family homes in 60617. I have a couple of homes in 60617. We market the same. We have the same pricing, and tenants come in to see the units, and they're like, "Oh, well, Mark's doesn't have appliances. Well, what do I do with the appliances?" And then you get into that, and then Jared does have the appliances. I can't tell you how many times we've had that discussion for that same reason. And here's the thing: in the summer, don't pack your freezer, right? Like you want to get everything in there, and there's a room for like a couple little grapes or an ice cream cone. You got to let the stuff breathe, otherwise they die out. That's the number one thing that we see in the summer is they pack it in. There's no circulation through the fan, and then boom, the thing goes. And I don't know about your previous, we call them customers or tenants. They're big on asking for refunds when the fridge goes out, and it's I'm a reasonable guy. I'm a reasonable people. We all put our pants on the same way. But what I'll tell you is, I don't have like $600 of filet mignons in my freezer. And it always seems that when the freezer goes out that there was like high-end steaks or some lobster in there. So don't fall for that one.
Well, the one thing that we started doing too is, so we require rent assurance on every property, at least at move-in. If they cancel it, that's fine. That's their problem. But in that scenario, they are that the renter's insurance should cover that. So that's where we push back, and they're like, "Well, I cancel it." It's like, all right, well, that's why we encourage you to have it for those scenarios there. So, but
Right.
what we were doing to offset what you were saying to compete against Jared or the guy down the street with new appliances was we'd lower the non-refundable moving fee down to $200. So we gave a $300 kind of spread. But then we started running into issues where it's like we referred them to an appliance guy that we knew wouldn't provide bad appliances. But then if they went rogue, bought something on Craigslist, all of a sudden they brought roaches into the house, which created a different problem.
Oh yeah.
It's really hard to get roaches. If you ever have a bad roach problem, you can't figure out where it's coming from. More than likely, it's coming from either the stove or the fridge motor. So that's a big place there. But yeah, so we did this. I did this breakdown of stuff, and I was going to share next time. I know that the next article I was going to do was, all right, so of those 30,000 work orders, what were the categories they broke down to? You know, what was number one, what was number two, and percentage wise. So if anyone else, I mean, we have tons of data on different stuff. I was going to break down break down appliances. So what breaks down on appliances the most? I'll tell you this: I never knew a fridge handle came off a fridge until I started managing on the south side. That was crazy. How many
fall off the wall either, and that seems to happen as well. Right.
Yeah. We actually got to a point where, because at Southside they would love to run their the stove, open the stove and turn it on there, and that timer always went. So we started buying the really cheap stoves that didn't have the timers on there, because that was the number one thing that went out for us for like 3 years in a row. So. There's always little hacks, but it always creates a different problem on the back end. So I remember when we first started investing on the south side, we're like, we're going to beat the system and we're going to put everything electric. So no more gas bills, the tenants not going to bill. And then we didn't realize that baseboard heaters, tenants wouldn't realize that you just can't leave it on for 3 days and you leave town and then you come back and not get a $900 electric bill. So we've actually converted all those from baseboard back to furnaces. I think
back to gas.
Over those.
That's funny.
So, but yeah, man. So everyone's listening. If we have we have work order data from not even just work order, leasing data too. So that's other stuff we could dive into. Average time of application, how long it takes, the average credit score. So I was going to start putting together some of that stuff. It's like we were always blogging, we're always trying to put information out there, but why would we just put some real cool stuff out there like that no one else is putting out there or no one else is comparing? So that's kind of our mindset. So if there's anything specific anyone wants data on, I'll throw an article together, or if it's if it's small, I'll just share it with you. So reach out to me anytime.
That's awesome. And that's priceless data just to know, right? And the only reason like a guy like Mark is able to put that stuff out there is because of the longevity of GC and all of the mundane day after day work order tasks that they've seen and gone through. We've recently started 12 months super serious, 18 months total with Property Meld, and that's we do internal maintenance here to keep costs down and sort of control timelines and things like that. That includes turnovers, but some of the data that spits out is amazing as well, right? And you start to see the trends happening over and over. And then you can kind of get deeper on like, okay, well, how do we fix the larger problem here at hand? So I love knowing that you're doing that, and that you captured that data. That's awesome.
Yeah, we ran the numbers on how much money our clients spent on Freon. Right now we're at that weird phase that if you still have a Freon thing, you're paying through the roof to refill it just to buy yourself probably another season. And we shared that with all of our clients last year. So this year now they're like, I don't want to be part of that statistic. Let's just replace it. So it helps us help our clients make some decisions at times, especially when it comes to like things that, sometimes it's just easier to spend $400 on Freon versus replace it versus you just had a brand new unit for, you'd be $400 into your new unit spending it already. So I don't know. Sure. So what else, man? How's summer going? Everything else? Anything else we talk about before we close up?
Yeah, summer's good. This is a busy time in leasing season, so there's a lot of in and outs with that. Business is staying busy, and as you know, and some other listeners may know, I spend some time up in Michigan, so it's like Airbnb season up there, and I will tell you, I've not had the fridges go out in Michigan. I haven't had cabinets fall. And I'll tell you one of the coolest thing about short-term rentals, I don't do them here. No interest in managing them. It's more kind of the labor of love. We do them up on a lake about 90 miles from here. We're very good at what we do here, but I've been scarred. with real estate here, and I'm like, oh, I don't want to continue to buy bunches of these. But in Michigan, when people check out, they're like, thank you so much. I can't tell you the memories I created with my family, and I'd like to put a pre-deposit for next year. So I get to see both ends of the spectrum, like the down and dirty grind out cash flow to the difficult situations there, to like the loving memories and relationships and great weather 80, 90 miles from here. So that's kind of what's been happening here.
And Bitcoin's at $109, man, 109,000. So that, I imagine that's feeling good too. I know, man. I'll thank you publicly here right now. If it wasn't for you, I probably wouldn't be invested in it. But at the same time, I might hate you someday if it goes south. I know you're 100% confident in it, but I always think about both sides of this coin here, Bitcoin.
Yeah. What you could do is, I remember when we first began the discussion. I know exactly where you were. I know where I was. I remember, verbatim the conversation, and that's what I tell everyone. If you take it in a year, how does it feel to sell it? You're not carrying the risk, and I'll let you know when it's about. I think we're going to close the year publicly. Here's my shot: 141 to 145. Wow. 1231. I think we're at one. I think that's where we're at. So.
You know what's crazy? Now that I've gotten into it, the more I talk with other entrepreneurs and real estate investors, they all have a stash of Bitcoin on the side. Like I call it, a lot of them use the word hedge their bet. So I was like, I put some money in here to hedge my bet on the U.S. stock market. But it's funny how many people kind of have pocket investments, whatever kind of quiet investments on the side. They don't really brag about it because maybe they're not sure they're doing the right thing. But it's funny how many people I come across in those conversations.
Well, there's a lot of institutional investors, and I like to mirror what like the big guys are doing. So like, let's just like not so much syndication, but let's just say you have like 200 unit apartment complex. One of the hedges that I've been kind of following that these guys are doing is saying, all right, so we have a $20 million building. We think in the next 5 to 7 years, our CapEx is going to be X. And then they kind of reverse engineer it and say, if we took X amount, put that on the balance sheet, this could actually rise up. The Bitcoin can actually rise up and put us in it it's like rocket fuel for acceleration. So it's like the reverse hedge. You could sell it, which I wouldn't do, but you could have it to offset any losses that you may have. And then what I'm trying to get my head around is understanding if you were to hold an asset like Bitcoin on a larger asset, say, an apartment building, can we use the depreciation, the paper depreciation, to offset the gains up here? So I know a lot of smart people, and if anybody out there is listening that's like accounting wizard and understands like FASB laws and things like that, I'd love to come on and chat that up too. I'm a big believer in Bitcoin.
I love it. Fannie and Freddie's accepting it now as a form of investment that they could put towards your assets. That's great. That's kind of crazy. And then, man.
Yeah, that came out last week, and I think that's a really good move. So before you could show Fannie and Freddie, right, or your loan officer, hey, I have some of this, but they would make you liquidate it and show it in fiat/cash. Now they're saying you could show it to us in the true asset form that you hold it in. It's a big deal. Nice. It's a big deal. So.
All right, man. That's all I got. Hopefully we'll get some people that listen to us and they'll ask some more questions. Thanks to everyone that jumped on here. So Kyle, Jaden, Javier, Brian, Mario. Thank you guys. And cool. Man, hopefully you had fun. And when I invite you back, you'll do it again with me.
Love it. Mark, always good seeing you. Thanks for having me on. Tell Brian again, happy birthday. Actually, I'll call him after this call.
All right. If anyone on here is watching this, made it this far, if you need tenant placement services or if you need property management, both Marblestone on the south side or us mostly everywhere else can help you out. So let us help you buy your time back. Or if you're just looking for some free advice, we'll jump on and try helping value no matter what. So we'll talk to you soon and we'll see you next week.
See you guys.